Boom. We are alive, ladies and gentlemen. Whew. Matic and Cardano have been fire today. You know, we've been talking about these face melting moments probably for the last 100 days. And along this, you know, a lot of you guys are like, when should I take profit and all this fun stuff? You know, sadly, there's no real solid answer for this. You know, a lot of people talk about risk management, and I'm going to give you a clear example of how that can often fuck you up. Because clearly one of the downsides is most people are new to the investment world, but most of you aren't. You know, I've had the pleasure of chatting with a lot of the private bear den, not you guys out there that are not paying for the group, but for those of you that pay for the group, I've had the pleasure of chatting with most of you at this point, and you've been kind enough to tell me how much capital you manage, and that gives me a lot of insight to where a lot of you are. Now, I know, again, a lot of the newbies end up in the market kind of at the most difficult time, which is right in the middle here. And your risk to reward relationship is never as valuable as those who have been here for a long time. And I think that's really important to understand, because it's a very different story for those of you that have been here for a long time and for those of you that are new as retail investors. And most of the Arcane Bear group is not new retail investors. So that's a hyper important moment. So let's start by using Matic as an example. So if you have been part of the private bear den, Matic has been on our VC playlist for 3 years, almost 4 years now, right? So often I've talked about thinking in decades, and there's a reason for that. It's because there's the majority of the time is actually when things are quite boring. Now, even if we go back to December here, right? Let's just rewind to December. And most of you joined the private group before December. So any of the plays that you would have looked at in our area, you know, I'm going to show you an example of one of the things I did wrong, okay? And this is why profit taking is such a difficult conversation. Is I've been building that Matic play for almost about 3 years. I think it's actually 4, but just the start of 4 is where we are in this bull market. And for most of that time, Matic did nothing, right? So when we first started to see this big explosion in through March, I actually closed out the majority of my position. And even more than that, on the first basically 300 to 400%, I closed out a big chunk. And then at around this 10x position here in March, I closed out most of it as well. And this is always one of the downsides to profit taking, is everybody enters differently, right? So the majority of the bear den, and I've chatted with a bunch of you. Yeah, a lot of you have made significant amounts of money off of these plays. And this is what I always like about venture capital. And more important than the exit, it's about the entry. Everyone gets caught up in like, oh, well, when should I take the profit? Well, if you missed the first part, if you became a retail investor, and I've consistently said this over and over again. First off, guys, the private bear den is full of generally high value or higher net worth investors. We have very few people that manage just like a small portfolio. And that was really insightful for me to learn, because I know that most of you are not little kids and you know how to manage your money prior to getting here. You've built businesses, you've done extraordinarily well before you got here, right? So I don't want to treat you like children by being like, oh, well, this is how we do risk to reward. And although that's good for trading, in the venture capital world, it can be extremely deceiving. Here I removed most of my Matic play at around 10x, right? Way back here, and here we are up 100x later. So now I have a very small in comparison to where I was, a very small position of my Matic play, whereas Bear Den Jerry has done a great job at not selling. Right, so the profit-taking scenarios are always difficult, because when do you take profit? And again, more importantly than when do you take profit, the first question you should be asking yourself is, when did you enter? You know, if you are already in profit, if it's the most money you've had, and again, this is not the majority of you. The majority of you manage significant sums of money, and you've been successful before you got here. And I know that's not all of you. So I apologize that if you're thinking to yourself, well, fuck, I just got here. I'm just trying to put a few $1,000s in and it's up 100%. What should I do? The reason why I tell you to think in decades is because if you just got here, you fucked up the first part of this conversation, which is not when do I take profits, it's when the fuck do I enter the market? And that's why we use these trading ranges. I'm definitely going to have to mark YouTube on this one, not for children. But I hope most of you are not children. Most of you are, again, old enough to make an understanding for yourself, and you will know where you should be reallocating, right? Because there is no set answer. The hardest part of the question is, when did you enter, not when do I exit, and what do I exit into? And I can always tell kind of a rookie investor, because that's their first question, is like, when should I be selling? No, the real question you want to know is, when should I be entering? And we are in the middle of the bull market. I've said this many times before. Technically, what you should be doing is thinking about the next 10 fucking years, because that is where you will make the most significant gains. Even if you're up like 3 to 4x today, that's nothing compared to 100x. And that's what I also did wrong. I sold at 10x for Matic, most of it, and now it's up 100x, right? So what good was that profit taking strategy? Look like a idiot now, right? It's like that was a multi-million dollar play from one position that I closed out the majority of back here in March, because we think to ourselves, well, yeah, 10x is pretty damn good, right? I should be excited about that. And then you remember, this is venture capital. And over the long term here, we don't know what that does. So if you're a new investor and you're asking yourselves these questions, more importantly than when should I exit, you should be really planning for the next bear market cycle, because that is when you get to accumulate all these undervalued assets and hold on to them while they go through massive returns. Anyone who's telling you otherwise, talking about these short-term trades, has been in the sector for a very, very short amount of time. And mind you, you can day trade and do well. Most of the day traders do not do as well as the venture capitalists. Okay, keep that in mind. David Hornick, if you want to check this out, okay? Again, remember, I've been here for a long time. I've been playing this game for a long time. The advice that I bring you is through decades of experience. So David Hornick and Arcane Bear, I highly suggest you watch this podcast. David Hornick did $2.8 billion in venture capital investments, and this does not happen overnight. He started with just a few $100,000 and is now worth $2.8 billion, and that's what venture capital can do. And on the short term, most of those investments have no liquidity for the first like 10 years. I try to really align you guys with the purpose to understand what's possible over the course of a decade, right? So if you are new here, if you did just enter Matic or did just enter Cardano, for example, you messed up the first part of this trade and you messed up the first part of this equation. And again, that's not most of you. You know, we had 300 to 400 private members following our Matic plays, following in with One. One is another fantastic example here, where let's go back and look at One and Fetch, because One and Fetch is another great opportunity. Again, One was on our venture capital playlist for multiple years, right? We kept looking at One, Seller, Matic, and there's a reason for it. It's because they were valuable venture capital plays. So let's go back to April. Let's go back to May or June, any of the good times to enter the bull market. Primarily, the more important part, that when should I take profits, you should be asking yourself, when should I enter? And this is always the ridiculous part, is because the average day trader fucks up all of those things. The average day trader gets into the market at the wrong time. Look at where most of these new YouTubers show up, at the wrong time in the middle of the market, and they're more concerned about risk to reward because they have no idea how asymmetry actually works. So take a look at this. Our one position is up around 4,000%. And I want to show you exactly what I did wrong with One again. Is here we go, right? Here is some of our first entries in March. We saw, some of the base entries in March, because once we saw that spring come in, it was a clear advantage. We were up 5 or 6x, and I closed out a good chunk of my play. And then what happened? It comes right back down to the top, to the bottom after you have your SOS outside of the box, and then you have your backup. And the backup here lasted about 90 days. It formed this beautiful reaccumulation pattern. But even this, 168 days of reaccumulation represented another beautiful moment to get into what then became an astronomical play. So all of you are always asking the wrong question, and I really need you to understand that. This risk to reward relationship that most of you are like, oh my God, I'm up, you fucked up the first part. Don't get that wrong again, and your future over the next 10 years is more important. Anyone who says otherwise is new to this space. This is what venture capital looks like. It has always looked this way, right? So even if you made a late stage investment, In December, you were up 3,000%, right? So some of my Harmony play is up 3,000% on average. But the downside is again, and this is what I've been trying to teach myself and it's why I reiterate this to you, when you make a good entry and you buy right and you sit tight, the gains are astronomical. And this is venture capital. This is just the course of a 4 to 5 year period. It's not even a decade yet. It's not another end of this bull market into the next bear cycle and into the next bull market. Again, a big part of the problem is that most people who go down this day trading route miss out on these astronomical gains because they don't know what they're doing in terms of asymmetry. I cannot stress that enough, right? So one is a fantastic example. Matic is another example. Let's take a look at a few more of our venture capital plays that we've gone over. I wanted to go over Fetch. So Fetch is another one of our venture capital plays that most of the early Bear members had on their roster. Again, I've spoken with a bunch of you who have made upwards of over $1 million playing this game with us, okay? I need all of you that are late to this market to understand that, because it's more valuable for you to have a long-term outlook than it is to have this very short-term outlook. And if you have that short-term outlook, that's why you manage a small amount of money. So fix that. If you change your mind and you change your viewpoint, you will change your portfolio. This is an emotional game that you need to learn how to play, and it's about making the right entries more than it is about making the right exits. So let's go through and look at Fetch. And Fetch is a really great example of me making this mistake again twice, which was, when do I take profits? Now, technically, I'm mostly out of my Fetch play already. It looks quite distributive here as well, but let's go back to my first entry. So here you can see our original chart of the reaccumulation pattern back here in March, right? So here we started to really lean into our Fetch plays back in July. You can go look at our videos talking about all these positions. And this is what I made the same mistake here. And this is what I want to go over about profit taking. More than the exit, it's about the entry. We made great entries. We saw a quick 10x. I took most of my position out, and then I forgot around 30% of the play on the table. Right now, the reason I think that this is so valuable to go over is because when I exit most of my position, the rest that is on there, I do not care about, right? So there's been 30% of this play now that look how high up it is since our original entries. Like even though it's not at the exact all-time high, it's still up 2,400%. And at a point, it was up almost 50x. Right, so because I took most of my position out at around a 5 to 10x position, and I let the rest ride, I don't care what it does for the next 10 years. I really don't care what it does for the next 10 years. My goal was to build a position, take out my primary capital, and then walk away and basically forget about it, because that's what has yielded the best results for me. For those of you that are trying to day trade, you will do worse. I promise you, you will do worse than the people who actually learn how to figure out venture capital. There are very few traders who make anywhere near as much money as people like David Hornick, who figured out how to buy right and sit fucking tight. So here we go, David Hornick. And I can't express this enough, guys. A lot of you get drawn into making these kind of beginner mistakes. It's why we don't talk about day trading, or why we don't talk about getting in a position here and then exiting here for like an RR, because those don't exist in asymmetry. You have no clue what happens over 10 years. Here's David Hornick, right? Founding manager of August Capital, brilliant gentleman. Let's see. David Hornick net worth. This is someone I had on the show in September as well. Oh, he's only worth $78 million. Oh, my bad. Only worth $78 million. I actually think that's incorrect. I talked to him and he's worth a hell of a lot more than $78 million. He told me a lot more than that. So I don't believe this wall mine company is off. It's closer to $1 billion. But anyways, I don't even want to look for that data. He told me, but anyways, that's besides the point. The exact net worth is probably almost insignificant. I mean, even $78 million, and this was only starting with a few $100,000 of venture capital investments. And again, the important part here was buying right and sitting tight. So again, just like Mr. David Hornick here, I'm not telling you guys anything that's new. I'm following a traditional pattern that has helped make people around the world hundreds of fucking millions of dollars at the least playing this game, right? Our tech team has done extraordinarily well. We have hedge funds and family offices that follow this channel that manage upwards of hundreds, maybe even billions of dollars from what I know. And that's important to recognize. The average bear is not your average bear. One of the great things I've been able to do is scare the shit out of people from joining this channel who are generally smaller scale investors, because this is not an easy game to play. If you show up here thinking you're going to get rich overnight by putting $1,000 into Bitcoin and that's going to change your life, you've misunderstood that this is a long-term story, and more than exiting, it's about where you enter. And most of the time what you get wrong is you don't think about the long term, and you miss all the beautiful entries that we made for the previous years in Fetch, Matic, Seller, One, Raven, everything that's done extraordinarily well. Go back, look at our videos for the last 2-3 years, and you will understand why most of the Bear family has made a significant amount of money following this tradition, because it works. That's it. Anyways, keep that in mind. I wanted to share that with you guys. I know it can get hyper exciting if it's your first $10,000 or it's your first $100,000. It's really easy to get confused and emotional, but you have to remember the audience that we appeal to have been playing this game before they found me. My mentors have made hundreds of millions of dollars, and those are the people that generally follow my work, because that's the type of wealth I'm interested in, because it's not monetary. It is about how you live life, what you appreciate. I love reading books. I love sitting outside feeling the wind against my face. I walk around the jungle and pick fruits from trees that I have planted almost 10 years ago. And if you do not know how to plant a tree and wait 10 years, you will not be as successful as you hope to be in this game unless it's by fucking accident. So please remember that. So with Matic, I believe we are in profit taking area here finally. I'd already closed out the majority of my position, so I don't have that much more to close out. Like, what am I gonna? It's up a lot, but I'm gonna remember I removed most of my capital back at a 10x, thinking that was a good idea. And this is the problem with this idea of like, well, when should I take profits? I don't fucking know. When did you enter? More than when should you take profits, right? And that's really what I want to drive home with you guys right now, is that the reason I talk about these long-term decade plans is because the people that are day traders make way less fucking money than we do. Anyways, that's my story, so I'd like to share. Cardano is also in that area as well. Again, you go back, you look at some of our primary entries. I think our podcast here at this first trading, this trading range here, our podcast, I was like, hey, we're taking positions in Cardano. Sure, I was a little late to the game. The risk is a little higher, but I like this idea. And not just that, I will hold on to it for the next 10 years. Look, let's just use Cardano as an example, and let's just make up some numbers. I put $10,000 into Cardano back here in February. It's up 600%. That means that $10,000 is worth $60,000 today, right? So for some of you, that might be like the most money you've ever had. But let's go over the long-term story here and really try to adjust. Let's say you take all of your profits out today. That's 60 grand, right? And you walk away. And the market goes up. Let's say it goes up to $3.75, because we made conjecture about this earlier. Actually, just for fun, let's even do that. Let's take a kind of final price outlook for Cardano. I do believe we are near the very final stages of this market, so it is like more prime time to be taking a look at profit taking opportunities. I say generally the 2618 after our midway extension over the last, I don't know how many, 3 bull market cycles I've been in, has been a pretty consistent profit taking target. I'm not a newbie here, guys. Like, remember that. Like, a lot of the people shilling you products and stuff, they're technically new here still. So this 2618 area is generally a nice area. I think it's around the $4 mark. We've gone over that multiple times. When you're in the middle of the bull market, you measure your regular reaccumulation range and you make your bout from there. We're pretty much on our way to profit taking area. This 1618 is a really easy target. We've hit that now. And because we are midway through the market, like, sure, this is a great spot, right? And we've talked about this. It's not like I don't give you guys ample opportunity to understand what's valuable, but let's just let's emphasize the long term of this story, because that's what's so important, right? Let's say you're up 60 grand, right? And let's go, you take all of your profit. You just close out, you're like, bing bong, ding dong, my name's a purple elephant and I've made out of cotton candy. I only live my life off dreams and wishes. I made 60 grand and that's like enough to live forever because, you know, I've never made so much money in my life before, right? That's what you're thinking. And that is true often for the new investor. So it goes up to $4, and then generally the reaccumulation cycle comes somewhere back to pretty much to where the midway of the bull market was. We saw that with Ethereum. Ethereum came back to $80. Now, if you go even further back on my channel, when Ethereum was $20 in 2017, we were buying Ethereum then, right? And this is the deceiving part. You take your profits and you forget about the long-term decade experience. You don't show back up, right? And then all of a sudden you wait, like, let's go, you wait, it comes back down. It spends a year or two, maybe 3, 4 years reaccumulating around this like $1 area. And then you come back. And Cardano's done something stupid. Maybe it's been adopted by like the UN. You've got billions of businesses building on it, and it goes through another crazy bull market cycle where you're up 3,000%, right? This is where most people fuck up, is they think about the day trade. They think about the short term. And what the problem is, they get concerned about the $60,000 that they thought that they lost, instead of just reaccumulating more and averaging their price down, right? When you build a portfolio, you should be thinking about at least a decade-long format, because chances are you're going to fuck up the next part, which is you're not going to continue to show back up if you exit your position fully, right? Like I said, a lot of my plays, I'm already like 70% out of the position. But when did I enter, right? That's a highly valuable function to understand. And if you're new here, if you didn't make the right entries, that's what you should be focused on. You should be focused on the market going up, coming down, and then playing all the way in this nonsense again. That's really the most beautiful part. And this is where most people make mistakes. I saw it in Bitcoin as a primary example, right? Let's go to the full-time story of Bitcoin here, BTC USD. Let's make some conjecture around this long-term story. We'll go out to the weekly, and we'll take a look all the way back to 2017, right? So here's where it gets deceiving, and this is where most people screw up, and this is why profit taking is the wrong way to look at this mentality. You should be more concerned about entries than you should ever be concerned about profits, because if you do it right, you're going to make hundreds of millions of dollars. If you do it wrong, you're gonna think you lost $50,000, walk away, be like, oh yeah, this is stupid. I was up 60 grand and now it's down. It's only worth 9 grand. Well, you fucked up because you thought the price was important instead of understanding the goddamn value of this sector over the next 30 fucking years. And that's how real portfolios are built. That is how real wealth is built. Anyone who's telling you otherwise is basically has very little money in their account. So keep that in mind, right? So let's use 2017 as an example. You didn't make the best entries, right? And you bought Bitcoin at, you're like, oh my God, I bought Bitcoin at $3,000 and $6,000, right? And then you go up here and you're like, oh my God, I'm up. Let's say you're up $100,000, right? Huge amount of money for you. That's what the price says. And you're like, shit, you're like, if I had only taken all of my profits out here, it would be amazing. Should you be taking profits at all times? Yes, I'm almost always reallocating small amounts, like 2 to 3% back into USDT, so that I have more money, or like buying like capital at that moment. And almost any time we go up, 2 to 5% is a pretty easy average for me. And not only that, I've exited 3 to 5 years worth of operating capital already. And I've gone over that, right? So again, everybody's in a different position. But let's use 2017 as our analog. You took most of your positions between two to four, like let's say $3,000 to $6,000, right? You watch it go up. You put in 10 grand. You're up. You're like, yeah, I've got $40,000. This is amazing. Like, I love Bitcoin. It's going to change. It's the future of finance. I love everything. I've made so much money. Doop-a-doop-a-da-ba-da, goop-a-doo. And you sound like a child because you don't know the long-term effects of living till 70, right? And this is the downside. This is where most traders, and the reason why most traders don't make as much as investors is because they think in such short time frames. Like, I guarantee you we can find 150,000 more venture capitalists who have done way better than any trader. Like, trust me, the proof is in the pudding. Go to the Forbes top list, private equity, venture capital. How many traders do you find? Fucking one, Jim Simmons. Like, that's it. So keep that in mind. It's not, it can happen, but just keep that in mind. It's not the majority. Why not choose the path that actually has almost a guaranteed version of success, right? So here's where most people make the mistake. They buy like a Bitcoin or two at $4,000. They're up 60 grand. They don't sell. Let's say you don't sell. You didn't take any profit whatsoever. You just never once sold. And it comes all the way back down. You're like, oh my God, I'm down like $3,000. When I had 60, this is what you're thinking to yourself, right? And this is classic. This is classic trader stupidity, is short-term thinking. So like, oh, I'm down only $3,000. And you know what you don't do is you do not understand the value of Bitcoin or the value of Cardano or the value of Matic. So instead of doing the smart thing and actually buying more, you don't, because you think you're down $60,000. And again, this is if you just never sold, never took any profit whatsoever, right? Nothing, just bought and walked away. So what do? You don't show back up. You don't think to yourself, hey, look, if I actually buy more Bitcoin today, I'm technically reducing my second Bitcoin that I bought at $6,000 down at $3,000. And then not only that, look what happens. If I could have told you, you could have bought Bitcoin at $20,000, you'd be like, damn, that's amazing, right? In February of 2018, you're looking at Bitcoin at 15 grand today going, yeah, fuck yeah. That's a 5X from where we are today. If you cannot think in decades, you probably will fucking fail. I don't think I need to say more than that. Look, and I'll give you my story too. I'll show you my rendition of this story, okay? I bought my first Bitcoin at $90, and this is really what started to teach me this process. I bought my first Bitcoin at $90. Not because I was smart, not because I was an investor, because it saved me money paying for servers. That's it. And I had a few of them because I was, yeah, you buy a few, you pay for servers. Like I still pay $60 a month for servers right now, right? We were getting Bitcoin for $90 and it was costing us $100 a month in servers. And they're like, hey, well, we'll give you a discount of 50% on all the servers you pay on over a month. So we had months supply of Bitcoin up front. This is what taught me this lesson. And this is what I want to save you guys the trouble and the mistakes that I made. Otherwise, well, like, yeah, well, I look like every other trader who pretended to know what they were doing. Is that, yeah, you can trade, you can use leverage, it can work. Most of the people you see that are like doing that, they make more money from affiliate links than they do from trading. So keep that in mind. They make more money from the average person being liquidated than they do from actually investing intelligently. That's why I suggest books like Dan Dow, 100 Baggers, is to really understand that this is your capital here is a function of time more than it is like, oh, I'm going to get in this year and I'm going to walk away with a $25 or an extra $40,000. And no, your portfolio is for building. It shouldn't even be for spending. Are you going to sell your house every time the fucking price moves? Like, oh my God, my house is up an extra $60,000. I'm going to sell it. I'm going to buy another house. I'm going to try and sell that house. Like, fuck off. Like, just accumulate assets. Like I said, my mentors have made hundreds of millions of dollars. They all say the same thing. They're not buying and selling assets. They buy assets. They buy assets. They buy assets. They almost very rarely sell unless it's to readjust their portfolio, their treasury, or say maybe they want to buy an 800-acre farm. They're like, great. Time to move from this position into another position. But it's very rare, especially for tax reasons. If you're an American citizen, like Jesus Christ, like I can't imagine how many American citizens have made the mistake, or how many Canadians who don't actually know how to do their taxes, that when they go to file, they're going to get dinged like no other. Anyways, the point of this is, so I bought my first Bitcoin at $90, right? And I watch it rip up to $1,000. And I make the first big mistake that almost every average investor makes. I buy Bitcoin basically here at around $1,000. No, sorry. And this was around $800 American. I was operating in Canadian dollars at that time. So $1,000 Canadian or $800 American, right? And then what do? I watch the market come down and I think to myself, oh my God, I just lost X amount of dollars. No, I didn't. I have the same amount of Bitcoin. And that's the most difficult part, is to understand that over the long term, had I done nothing, And see, this is where I started to make mistakes, right? First off, I didn't sell any of the Bitcoin here, but I started to try to trade. I started to think, oh, look how much the market moves up and then down. Dogecoin is another great fucking example of just buying right and sitting tight and being patient. I mean, I've been telling you guys to buy Dogecoin from August. I know a few of you have made $100,000+ from fucking Dogecoin, right? Keep that in mind. And that's not because you were trading. It's because you bought a little bit, you understood that asymmetry is extraordinarily valuable, and you waited, right? That's it. If you're up if you're up over that much in Dogecoin, yeah, take some profits out. Buy your wife or your kids or yourself something nice. Do something with your life, right? But even more importantly, what if Dogecoin is at 80, or it's probably never go to $80. This sounds ridiculous, but I think this where it's at is probably a pretty overvalued itself. Like, I'm not suggesting you buy Dogecoin today, but I'm trying to fill the insight to this story here. So I bought my next Bitcoins at like $1,000, and I had to watch it come all the way back down to $200. And it felt at first like I had lost money. I was like, oh my God, I've lost like X thousands of dollars. How stupid was that? Like, I should be more intelligent. Like, what am I doing? So I started to study. I started to learn about trading ranges, right? So in March of 2017, basically right here, at this moment, our first SOS, I opened the Arcane Bear YouTube channel because for the prior months through basically May, June, July, if I have a few friends that live here in Costa Rica, I was trying to tell everybody I knew here in Costa Rica to buy Bitcoin at around $300 to $500. Nobody listened to me, so I thought, well, you know what? At least on YouTube, if I start talking about things that people are interested in, they'll listen because they typed the word Bitcoin. So we opened our YouTube channel in March of 2017, basically around $954 again. And one of the reasons why I did this is because I was like, God damn, this is a beautiful cup and handle we're witnessing. A multi-year cup and handle, and that's exactly what it was. It was a beautiful Wyckoff trading range with a multi-year cup and handle. It's even more prominent if we look at it with our candlesticks here. Right, so here's the multi-year cup and handle, and I started to scream about Bitcoin. I opened our YouTube channel, and look what happened. Look how much it's gone up. Now, again, the downside is you're thinking to yourself, well, shit, if I bought at 90 and I sold at 1,000, I could have rebought back here. But you don't, because most of the time when you're a new investor, you think you lost money instead of understanding that you own assets, right? Like, I don't look at my property and go, oh my God, it was worth $280,000 last year. Now I could only sell it for, actually I could probably sell it for more this year, but I could only sell it for $200,000 this year. I lost 80 grand. No, I think I own a fucking waterfall and a private creek. I have a private well on my property with 100 fruit trees. I have 2 acres. I have all of it's paid off. I don't think to myself, I lost $80,000 because the property of my value of my house has changed. Why would you think about any of your other assets the same way? It doesn't make any sense. It makes 0 sense. Right, so what do? You don't get back into the market and you end up missing the whole moves. I don't know how many people have sent me messages that go, oh my God, I should have stayed focused on paying attention, because it is the 10-year story that matters. Anyone who thinks otherwise is a fucking newbie here. Okay, so where are we at with Bitcoin? Could we see more distribution here? Could we see a temporary downside? Yes, absolutely. We're well above the secondary regression line. Not only that, we have our 21-week moving average coming in here strong. This is always one of the fun characteristics, and it's right above the top of our final regression line. This is beautiful. We've talked about this area before. It is obviously near the end of the bull market, just in general. Although one of the important parts to recognize is, what about if this was a larger reaccumulation pattern? Let's. I don't want to delete everything because I really like this chart, but let's just. This is going to get a bit messy. So this chart has been drawn exactly this way for like 6 months. Almost 9 months now. I haven't touched it. It's stayed exactly the same, and it's worked out flawlessly. So what I want to do here is talk about something else. Now, so for those of you that want to, or if you've been around long enough, you will recognize that this was the trading range that we were following. This is the one where I started to scream around $9,000, like, guys, we are in a bull market, like, get ready for liftoff, right? And there's a reason for it, because this was the trading range. But let's make further out conjecture about where we are in this bull market, right? And let's go, okay, I know, again, this is going to be messy. I apologize. Here, let's go that this was an accumulation range, right? Because clearly that's what it was in the past. All-time high breakout on every single one of these ended up being a much larger accumulation range, right? So here's the mistake that or not the mistake, but here's what we did with Fetch as well. Jerry will remember this. A bunch of the early, the first like 300 to 400 of you in the private group will remember this. What I did is I started to chart the bottom of the trading range for Bitcoin like this, like, here's our selling climax, our automatic rally, our first, and then our spring, and then our first SOS and our backup, right? This is the trading range we were charting for Bitcoin basically this year. But look what happens is that this actually becomes a much larger trading range. And this happened back here as well. This is a recurring experience, that you have a trading range at the bottom here, but you have the all-time high trading range. So let's look at today as an all-time high trading range, right? Boom, boop, 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 doo doo, boop, doo doo doo, boo doo, boop. So this is very likely a trading range here. And this is what we're witnessing. This moment here is a temporary, even if we see a larger distribution, which I would fucking love to see, scare all the stupid little babies out of here. Like, get rid of you guys. I am so glad to see retail traders get pushed out of positions at this point, because we're trying to help you understand the long-term potential, not by jumping in and out of trades to try to accumulate capital, but what it means when you just accumulate assets. Especially when you're new, you're going to make so many mistakes trying to trade. So here we have this much larger trading range, right? Bang, like this. We charted the smaller trading range near the back. That worked out fantastic. But here's this much larger trading range. This is basically just one giant SOS. I would, it'd be even funner if we saw a back up to 20 grand just to scare the shit out of people. Right? Because this is where all the newbie traders and investors make mistakes. They're like, oh my God, I'm up 200 grand. Oh my God, I've lost. Most of that capital has been removed. And then before you know it, they get pushed out of their position. They don't understand that what they should be doing is continuing to generate more value for your community. You should be generating value for your community through acts of service or products that you provide. Let me say it again. You should be generating value for your community through acts of service or products, period. That's how you should generate wealth. Okay, back to the chart. And while you're doing that, you should be trading those paper dollars or whatever they give you for assets, whether it's a property or building more businesses, or in this case, Bitcoin, right? And here they go, they get pushed out of their positions, and then there's people like me on the sidelines going, great, you know what? I've already told you I have like 3 to 5 years operating capital so the business can function. I'm going to buy more of it on any step we see down here. I bought more Bitcoin the other day because I know what happens. I know the price comes down and then it goes up significantly higher, and that it is a time of function, or a function of time, that makes that difference, right? So we're seeing these constant repeating patterns, and I constantly see new investors make the wrong mistakes of thinking that they're going to be a good trader. The reason we go over the Wyckoff accumulation ranges is not to be a good trader and go, oh my God, I'm going to jump in here, I'm going to jump out there, I'm going to jump in here, I'm going to jump out there. And that's what most people are doing. They make less money doing that, I promise you. Well, I myself, Bear Den Jerry, and we get to go do whatever the fuck we want. I get to go surfing, I get to go hiking, I get to go play around in waterfalls with naked, beautiful women. Like, I'm out here having a good time, barely focusing on the charts whatsoever, because I understand the long-term value that's at play here. So, some of you guys are asking like, oh, I'm a newbie. What's newbie friendly? We are extraordinarily newbie friendly, but the problem is the value we bring to the table, you need to recognize the long-term story, because otherwise you think you've lost money. Like a little baby. And if you want to be a little baby, and if you want to make all the mistakes these early traders make, you go fucking right ahead. I'm trying to save you from doing that by showing you this repeating story and this repeating pattern, because I have been here since Bitcoin at $90 when we saw the first peak out, right? Like, let's just pretend you're back here, right? How many people are like, oh my God, Bitcoin's up at 90 bucks. I sold it it's down at 80 now, or it's down at 50. Like, right? Go back in time. Just ignore where we are today and do the same story, right? Here we are today. You bought Bitcoin at the all-time high, and you're thinking you're like here at $30, and you're thinking to yourself, oh my God, if I only had sold at $200, I'd have an extra 60 grand. Yep, sure. That looks true for the moment. And then what if you did sell and then you forgot about it because Bitcoin gets boring and you think that the price dropped down dramatically because you don't know what the fuck the value of a good investment is over the course of a decade. And look what happens to you. You wait a decade. Like, literally, you wait a decade. You could have done nothing. You could have been out trying to generate more value for your community. And look how high up you'd be. This is the most important part of the story. This is what every newbie needs to understand. Is the decade-long story. Anyone who tells you otherwise is a little baby, and they're new to this space themselves. Anyways, yes, congratulations to those of you that have your big boy pants on, can think in terms of decades, because you're not thinking like an 18-year-old kid who doesn't think that they're going to make it to 25 because they're dangerous. Look, I didn't think I'd live past 19. Every day I get older, I feel more and more confident that I'm going to live to like 90. Don't fuck around. Play this game like all the other people who have made hundreds of millions of dollars. If you want to be a trader and lose a bunch of money along the way, you go right ahead. Follow those people, because that's what you're going to do. And you will eventually come back to this sentiment and go, hey, I'm not using trading ranges to trade, although I do that for fun because it's like jumping out of a plane. I like the excitement, and getting the timing exactly right. That's not how I've made the majority of my portfolio grow. I do that for fun and amusement. Not to grow wealth. The sooner you understand that, the sooner you are on your way to tens, if not maybe even hundreds of millions of dollars through proper acquisitions of buy right and sit tight. Heads I win, tails I only lose a little. Don't even listen to random fuckers like me who haven't made hundreds of millions of dollars yet. Listen to Manef Prabhai. Listen to Christopher Mayer. These people made billions of dollars following these strategies. I am echoing to you a strategy that has helped make people hundreds of millions and billions of dollars throughout the course of a few decades. Don't cut yourself short by not understanding that process. Awesome. And if you have, and again, just for fun here, just so that you guys know, like if you're all of a sudden up a few $100,000 on Doge because we were recommending being stupid to some degree. And again, not being stupid, but understanding that a small investment can be worth a significant amount of more. Take the profits back out. Take some of it out. Yes, of course. But more importantly than taking the profits out, it's about understanding when did you enter, and don't take it all out because you're going to regret it. Even if it goes down to nothing, ride it all the way to nothing. My stop loss for most of my plays now are zero because I took my principal capital out at Matic around 5x. Cardano I'll probably do later today because I was a little late to that game. I remove my principal and I walk away. Then there's no risk. There's only upside, and I'm smart enough to know that the decade pays off way better than these short-term trades. And I know that's hard to understand. You can become a good day trader. Yes, some people like doing that. I don't. I prefer to spend my time sitting outside meditating and taking psychedelic mushrooms and just watching my portfolio grow over the next decade. You have to remember, I have started multiple businesses way before I ever became an investor. I own a ginger tonic company here that's probably on its way to being worth tens of millions of dollars in the next decade or two because I understand the function and value of time itself. I cannot express to you enough how valuable that is. And again, anyone who tells you otherwise is a newbie here. Or they're day traders, and again, they don't make as much money as a venture capitalist. Just go look at Forbes' rich list. Very few traders are on there. Most of them are private equity and venture capital. And that should tell you something. Focus on the game that works, not the game that looks super exciting. I'm going to up 10 grand. I'm going to move it over here. I'm going to jump over there. I'm going to swing over here and dingle dangle over there. You're going to lose money. Don't do that. I'm trying to save you money. You know, in the intermediary, sometimes sure, it'll look like you lost capital. But if you're smart enough to know that the place that owning property I was gonna take you out in the jungle with the camera. Actually, make me go for a second. If you're smart enough to know that owning property in the middle of the jungle with hundreds of fruit trees, I go ayahuasca over there. I go ayahuasca over there. I've got a private little creek and waterfall. I've got my own solar panels. I've got all this beautiful property. But there's nobody out here, and you're gonna try to tell me that if the price takes them down, even in the slightest summer, not a chance. You probably couldn't even hear me there because I was outside, but I'm sure you get the idea. Anyways, this is Tio with the Arcane Bear. I hope you guys enjoyed today's episode. I try to keep you guys away from the people that are likely going to lose you money. Because they're out there. And they're copycats to some degree. So whatever. Bye. Anyways, this is Tio with the Arcane Bear. Thank you all for joining us today. I'm going to take a little bit of today's episode to go over some of your guys' thoughts. Let's see. Everything's looking good so far right now. It looks like Ethereum is going to come down and test our primary support. Probably around $3,500. That was the area we were looking at in yesterday's episode. I still feel confident about that. Couldn't break above the Bollinger Band here on the 4-hour. And again, what I'm doing here is I'm not trading. I'm just trying to figure out, is the bull market over? And it doesn't look like it. Sorry, we're going to have to get rid of LB. Hi, user on this channel. Boom. Bye-bye. Okay, so there we go. We'll take a quick look at Bitcoin as well. So here, again, guys, remember, it's the long-term story here that is the most valuable. You need to think in terms of decades. Anyone telling you otherwise has not been here long enough to recognize the real story that's taking place here. This is venture capital. People make hundreds of millions of dollars doing this, and it doesn't involve a lot of work. Like, come on, how to make more money while doing less fucking work? Like, get your head straight, ladies and gentlemen. Anyone else is just trying to shill you something so they can make money off of you, I promise. Let's go back to our other Bitcoin chart. So this is probably why people get confused and think we're traders to some degree, is because we do use trading ranges. I do try to look, but again, predominantly speaking, we're just trying to look at where we are in the market. Again, could we see a quick dip down to $35,000? Fuck yeah, we could. I'm going to be buying all of that. All of that. I'm going to buy all of that. You know how many big players are going to come here, buy the shit out of that? Don't worry about it. It's not worth your time to think about. You're like, oh my God, I'm down like $25,000. No, you still have the same amount of Bitcoin. I still have the same property with my fucking waterfall. I didn't lose the waterfall all of a sudden. The value of the property has not changed. Just the price does. And that's nothing but a hallucination, ladies and gentlemen. Anyways, although I guess with these springs here, we could probably even drag it down a little lower. And maybe even this is the spring now. There's a fair amount of supply that's come in, and it brings in our equivalent to our primary shakeout here and here as well, which is usually what we like to look for. Bing bong, purple elephant, awesome. So I think we're still right in the middle of this bull market. The next little bit is going to be face melty, just like what Matic did, just like what Cardano is doing right now. I see strength in other areas of the market too. Like, it was crazy to see Dogecoin come back the other day. One up 22%, Cody up 15%. Not everything, but let's look at Dogecoin because I thought this was ridiculous. So guys, remember, I had been talking about why I thought you should buy Dogecoin in February. And I said just a small investment. I was like, look, throw $1,000 in there because heads I win, tails I only lose a little. Where are we at approximately? 11 over a 10x. If you put $10,000 in there, you're sitting on basically, if you put $10,000, you're sitting on $1 million play since February, and it's actually higher than that because we were in early January. Well, technically way back in August, but let's say January because that's probably when a good chunk of you guys showed up. That's a 15x. For every $1,000 you put in there, you have $15,000 more. That's incredible, absolutely incredible. So keep that in mind. High value returns, low risk, only had to put $1,000 in there. And here's the potential of asymmetry. Should you remove part of your position? Yeah. How much do you want to remove? I don't fucking know. I don't know how much money you have. I don't know exactly when you entered. Anyone that's telling you they know that answer is full of shit. I'm actually at least giving you a clear and honest answer saying, I don't know what you did. And I don't have it. There's no like, my shoe doesn't fit you. My life doesn't fit you. You might not living out in the jungle growing ayahuasca. It's not for you, right? Understand that. Interesting to see though here. Interesting to see that Dogecoin did so well after those videos. But this is a totally different story. So let's take a look at your guys' thoughts and questions. Thank you for letting me riff and rant. Someone sent me a message this morning that I thought was absolutely ridiculous and just goes to show how little they know about these markets on the long term. Let's take a look. We'll go back over a few of your guys' thoughts and questions. Is it too late to get in on Matic? You know, Leo, again, I went over this. More important than, yeah, this is not the best time to be getting in the market effectively, right? If you're late here and you're expecting huge returns, yeah, you're putting yourself in a position to make it feel like you lost money. Is Matic a good asset on the long term? Yeah, it's one of the reasons why we have had it in our venture capital portfolio for so long, and why I will no longer sell any of it. I took out my primary capital. We did decent off of it, but even then I'm looking at it going, well, I actually exited it incorrectly. I exited at 10x and now it's up 100 and I feel like a shithead. So yeah, it's probably too late to, like if you're a new investor, you should be more focused on research and study than you should be about trying to make money, because it's going to yield you much better results. Danny Neal says, thank you for everything you teach. That's I appreciate this. Prince Philip says, guys, pay attention to this core message. Thank you. I appreciate that as well. Leon Ling says, hello, Mr. Bear. Can you explain more about taking profits and expanding your position? Leon Ling, more than taking profits, you need to focus on when you entered your position. If you're focused on taking profits, you made the mistake of not being here during the bear market. That's more important. Recognizing that the bear market will come and preparing for the next decade is ultimately the best way to go. So glad to have caught the live, especially this eclectic vibe. I love this. I love these ones, guys. So many people out there shill you shit, and they're not coming from a good place. They've made a lot of money off selling affiliate links, and therefore they can take positions that are just look outlandish. Another reason why I don't generally share like how well we've done on a number to number basis. First off, I live in the middle of the jungle. I already have a 30-foot tall fucking gate with an armed guard tower for a reason. I'm not trying to attract more heat to myself. I guess if I lived in a richer country, I might be more prone to showing like positive returns, but I also don't like bragging. I wear like clothes that Cointelegraph gives me for free because I don't give a shit. I'm not trying to buy Givenchy or something stupid. It's just not my style. I'd rather sit outside in fucking 4-year-old clothes and eat ayahuasca. I don't care how much money I have. It's almost irrelevant. It's been a function of providing something valuable for everyone and recognizing value before everyone else does. But it's not as valuable as people think. Like money itself is not as exciting as people think. My first business was doing like 60K a month. And I'm sure for most of you, that's like life-changing wealth. That was like, so I'm not here to show off anymore. I don't care. I've lived in the $10 million homes. I drove the $100,000 sports cars. It doesn't make you a better person. I'm more focused on being a better person. And right now that might mean to tell some of you that you're fucking wrong, and to focus on what you might need to do to be right over the long term, and how just to save you all the stupid mistakes I made to get here. It's like the core value of that function, at least. Too many people are talking about Aquari. When people just show up in the chat like that, like, oh, Aquari, just don't listen to them. It sounds like a short-term flash in the pan. If you want to know something that's really valuable, go look at Avalanche. Doge is successful because of the community. Yeah, I agree. People choose what value is, not the product itself. I'm curious why chart is in USD. I'm almost exclusively charting BTC from way back. So this is a great question. So I'm going to go over this. I think this is a really valuable question. In 2017, 18, we were charting only against Bitcoin. All of our charts were against Bitcoin. But as the bigger funds started to show up, people that have hundreds of millions of billions of dollars started to play here, the Bitcoin pairing basically became irrelevant because they don't give a shit. They don't measure their alpha in Bitcoin. They're not like, oh, our fund made X amount of Bitcoin this year. They go, no, this is how much we made in US dollars to their clients. And as soon as those big funds showed up, it changed all of our charts. So that's the simple, easy answer. The big funds showed up and they changed the things that are in play here. And again, guys, look, this looks like a distribution pattern, technically speaking. And there's still a probability that we go into a reaccumulation after decline, which is basically a perfect analog to what we see back here. And I remember a bunch of people exited. There were even hedge funds that were exiting here, like on Decrypt and on Cointelegraph. There were big players who like, yeah, we're exiting at 12 grand. You know, we think we're going lower. And what did we see? We saw what appeared to be a distribution pattern, and then it came into a reaccumulation after decline. Do you really want to risk not being in a position for what is this? 15% when you've got another like 100 to few 100% along the way. Those day traders who do that make less money than us, I promise you. I know for a fact, but that's another story. So this is unconcerning to me. Even if we do come down lower, that's just another opportunity for me to buy. I'm not going to close out a position here to try to like take advantage of if we come down to $34,000. Any of the people who are, again, they just don't have enough money, and that's what they're trying to do. They're trying to make more. They're like trying to get to a position where they feel comfortable enough to have more money to allocate. Well, if you played this game properly, you'd have millions of dollars already, and you wouldn't have had to do any of this. You wouldn't have to have stared at screens all day. You wouldn't have had to chart all the time. The reason we do this is to try to help draw in the average retail investor and then show them the light, what works over the 10-year plan, because this is dangerous. I'm going to get out here to try to get back in here to make more here. Like, come on, like what a pussy. It means you don't know the long-term story. Anyways. Yeah, if you guys just keep writing Aquarian here, I will just ban you. Crypto West says, I agree, Arcane Bear. People follow green candles too much and expect short-term profits. If you did not take a good position in the beginning, you just need to wait longer. I agree. This is 100% true. Could I box BitBoy crypto? Oh, that'd be fun. I would love to see those, actually. If we had like crypto... like MMA or something, that would be fun. we could give all the proceeds to charity. I would love that. Cheat boy crypto, okay. This is my favorite video that you have ever made, brother. The reason behind this is you're just ripping off the chest and speaking truth and wisdom. Thank you. I appreciate this, guys. You guys are fantastic. Florian says, I learned so much from your videos. You're amazing content. You're a fucking amazing free content. I'm just gonna blank out the swear like I haven't been swearing this whole video already. It doesn't matter. Let's keep swearing. Prince Philip says, Prince Philip says, okay, Arcane Bear, you're broke. You have $1,000 to place on one bet, no big caps. Which project would you put it in? I would invest in myself. More at that. If I was back at $1,000, I wouldn't be making an investment. I would be investing in my ability to create value. So for instance, let's go back. Let's go back to when I only had $1,000. That might actually be a fun story. Okay, we rewind to so first of all, for those of you guys that don't know me that well, I was a street kid. I dropped out of school in grade 10. I started taking a bunch of psychedelics and I studied music for most of my early life. At the age of 18, with basically only $1,000, decided that I was going to hitchhike from Canada to Central America. I was not in any way, shape, or form thinking about investing with that $1,000 because for me, the investment was myself. I decided to take myself on a journey where I would discover what it is I thought was valuable. And I played music. I played music for food. I played music for free places to stay. I played music and met beautiful women. And along the path there, my first partner ended up being worth like $50 or $60 million. I didn't know it at the time when we first met, but she happened to like doing yoga and dancing to my music. My first big investment of $1,000 was to find out who I was and what I thought was valuable. That's what I would do if I only had $1,000. Because if you put me back in that position when I was 18, that's where I would go. Now, there's a different story today. I would actually use it building a business. It's probably easier to build like a drop shipping business now, or like an Amazon affiliate website and go back. Some of the first businesses we started were like Amazon affiliate companies, where we'd build a website, we'd sell yoga ball chairs, and those websites would bring in like $30,000 to $60,000 a month. More than an investment in an asset, I would focus on investing in building a business, because you need to generate revenue. And even more importantly, it is so satisfying to do something that's valuable for the community that provides value. That's why the Arcane Bear is one of my favorite things. Yes, does it help? It helps generate revenue. Yes, but the most valuable thing I've gotten over the few years is when I get messages from some of you people, or from the Bear family. Sorry, but I didn't mean to delete that message, but when I get messages from you, you have paid off your house, you've covered all your debts, you for the first time have broken into wealth that you've never had before because you've been a part of the Arcane Bear family for the last 3 to 4 years. That ability to generate something valuable through products and services to someone else is what I would invest my $1,000 in. If you don't know what that is yet, that's what I would be focused on more than investing itself, because you want to generate value for other people. Did you ever think of writing a book? I love the bits of golden philosophy you have. Yeah, I'll probably write a book when I'm older. I love reading, so it makes sense that maybe one day I write something instead of just read things. Jules Verne says, between yesterday's video and today's, it just confirms I need to join the den. I'll see you in there. Watch this channel without being in the community for too long. Thank you. Chemo says, I love the rants. Much of this is what the newer investors need to hear. Good to hear. Good on you, Tio. Yeah, thank you. It was inspired by someone's stupid message to me this morning, who truly, obviously, I guess, doesn't understand what the hell they're doing. I thought they did. Tried to figure that out. Like, hey, I love you guys. You're my friends, like on a friend basis. Yeah, let's hang out. But clearly, what's your purpose? $731,000th the way through. Yeah, fun. When will Ren begin another move? I'm not sure. Flow with Chloe. I like your name there. Flow with Chloe. Thank you, Flow with Chloe. I like that name, by the way. Flow with Chloe. Maybe it's Chloe. Says, I really, 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 really wish I continued listening to you. Crying over my irrational mistakes over the past 3 days goes against everything I planned, which is just to buy and hold long term and to continue accumulate perspectives. So much smarter, Flow with Chloe. You sound like a beautiful individual. Focus. Maybe you love doing yoga classes. Maybe you love giving, I don't know. Maybe you love teaching nutrition stuff. Focus on what makes you happy, that generates value for other people. And when you can, make investments every time that you get the moment. And if you do that for the next 10 years, you will make a significant amount of money, and you won't have to stare at charts. And Flow the Chloe, you'll be able to come hang out with us in Costa Rica. What do you think about GRT? I have a small venture capital bag of it. And again, remember my goal with venture capital is heads I win, tails I only lose a little. What are your thoughts on BitTorrent? Here, I went over this yesterday. I don't understand a goddamn thing outside of my little circle of competence, which is values or rails and communications of value. So I just try to stay there. Yeah, understanding the value of a token more than the price is so important. I think that's such a great quality to try to go for. If you understand the value of something, then the price becomes irrelevant. Like, again, I have a waterfall on my property. What do I value that at? Versus what, you think I'm just going to sell my house because it was up and then I would sell it in 2008 because the market crashed? I'm not a fucking idiot. No, I would buy more properties at that moment. I would use my property to leverage against itself to buy more properties. That's what the smart investors do. They don't sell them. Crypto 5000 says, the worst thing I did was hold on to gold and then not sell it, and then was not buying crypto with it when I finally sold. I think just holding assets. I'll give you an example. I bought this gold necklace. So for those of you that don't know, it's pretty ridiculous. I bought this gold necklace in 2017 when I was buying more Bitcoin. This is like a $3,500 necklace. It is 99.8 or 24 karat gold. It is a bullion necklace. It was around $3,200. It's around 48 grams of gold. So just a little bit under two ounces at the time. Now I could look at this and go, oh, what a bad investment. It didn't do well as my other investments. But the point of the necklace was that I always had money around my neck. If I, for some reason, lost my wallet tomorrow and I didn't have a bank card, I could just take this off. I could go to one of the gold jewelers here, and then I've got enough money I need until I get my cards back or something, right? So what's the utility and function of something? I think is such an important part. Nowadays, crypto is easier to do that with. Now I could sell crypto just as easily, but back in 2016, 2017, that was not the case. It would have not have been as easy. Yeah, great. Ecto Rotary says, just split your HODL position with your totally golden bot positions and never use a small bit to trade on your daily thriller. Yeah, I agree. You're like the Gary Vee of blockchain. Well, that's a huge compliment. Thank you. Top 10 project bear market. Let's wait till we get to the bear market to find out. I'd invest in my next month's rent. I would skip rent probably to some degree or another. But I also, remember, we go back to when I only had $1,000 and I had no home. I was playing guitar to find places to stay, and I ended up working in hostels, right? So if you can better use your time to actually cover things, I would go to work. And look, anyone who shills this Achari shit is just getting kicked out off the den right now. Prince Philip says, thanks, I love your answer. Whoa, so many more questions. Yeah, I'm just gonna ban all the Akaris. Sorry, guys. Bye-bye. Okay, I'll look at just a few of your guys' last thoughts and questions here, and then we'll jump off. Alessandro says, I'll come visit you one day. Sounds fun. What do you think of Bao? I have no idea. MM says, we hit an 11-year resistance. 11-year resistance? We're definitely above the top of the previous regression line. I don't know where he's getting an 11-year resistance from. That sounds like some made-up data. I do like, one of the only other people I like that's specifically charting in this space is Benjamin Cohen from the Cryptoverse. He has some great data. He's and Lark, because Lark is not a trader. He's strictly a value investor. And DataDash, actually, too. Those are the only 3 channels in the YouTube space I would ever listen to. And Kathy Wood, who's like my top favorite. Maybe I have a crush on Kathy Wood. I'm not sure. It's probably the second. If you are buying because of the price, you're probably entering a Ponzi scheme. Value is everything. I agree. Well, maybe not about the Ponzi. Watched your Tyler Jenks interview last night. Oh, I love Tyler. He always got such flack for that one. We were at $6,000. We were at like $20,000. He's like, we could go down to 1,500. We went to 3,000. He was like, oh, we didn't go to 1,500. It's like, guys, you need to understand that we're looking for like relative bottoms, not exact. Okay, that's the first key motion to recognize. Yeah, I'm banning the shillers. Sorry, guys. We normally have some more admins in the chat, but it's Saturday. It's harder to go. Tio, are FTX fees less than Binance? Yes, they are. And if you go to arcanebear.com/FTX and sign up, you get 5% discount on those fees as well. Now, again, I don't suggest you do leverage trading. Okay, I will never recommend people do that. I will never shill Bybit links. Anyone who does that. It just gives me a kind of a sick feeling, because I know a lot of people lose money when they could have just been in the market. Ninja says, I messed around with thousands of dollars, moving it here and there, making a little gains and losses as I went. If I had had even a little bit of this as I dabbled, I would be living a different life. Well, I'm glad you're here now. Maya V says, I love what you're saying. Money isn't everything, but simply a tool. I love what you're teaching. I appreciate that. Yeah, I sold a bunch of my gold back in 2017 as well, but this was I wanted to keep this. It has utility for me. Yeah, well, yeah, we hit the top resistance of this trading range. That's it. What's the minimum I should vest if I'm only 15? Well, King Dre, great question. Glad you're so young. The minimum you should invest is like at least 2 to 3 hours a week of reading. Who cares about the money? Don't even think about the money. Think about researching more than anything. That's your favorite. Can we touch 41K? Yeah, we could go as low as 32,000, and if that is not the bull market end. Any of you guys shilling tokens here, we'll just ban you, okay? That's just the way it goes. SRM thoughts. I'm a big fan of SRM. I've got a fairly large position of it right now. It looks like we're finalizing our backup phase. Here's SRM. Wait, hold on. Boom. Here's our SRM. We're moving right into the what I believe to be our backup phase right now, into the bottom of the channel here. Now we are quite high up for SRM, but we had a nice reaccumulation, rising gradient bottom. We saw a nice 130x off the kind of our first entries in the position. We've retraced a good 70% of that. We're going to find probably most of our support around the $7 here, so I suspect that we see a quick spring down. I would love to see the break back above this falling channel at the moment, but until we do that, yeah, until we see kind of probably a test of the $7.30 area. We want to fill in this gap in the VPVR, this area here, before we're going higher for SRM. If not, first steps as a beginner, will your private group be beneficial for me just starting? Absolutely, but you really need to think long term to be successful. It's always about the 10-year game plan. It says, gives me great joy when you ban idiots. I appreciate that. Thoughts on new cipher? None. Data Dash is very clever. Hey, Data Dash actually arrives in Costa Rica here today. Speaking of Data Dash, she arrives today. I'm going to spend 2 weeks hanging out with one of my good friends. I'm not in the USA, and I'm not a US citizen. Okay, well, we'll leave it off that pretty much. It's a long episode. Can you own firearms in Costa Rica? If you're a resident, and yes. When is Emin coming on the show? We were booked for yesterday. We had to reschedule. So hopefully we'll figure it out there. I feel like your channel is blacklisted on YouTube. It doesn't pop up that much for me. It could be because I swear so often. I'm not sure. It could be because it could be because I swear so often. Daniel says, I really appreciate your message. It's full of truth and wisdom. Why Arcane Bear, not Arcane Bull? Ooh, fun. First off, the bears are the smart ones. Think about it, right? The best time to get into the market is during the bear market, right? So the smartest ones are actually the bears. They're the people that know how to forage for those long, cold hibernation months, right? So the bears are the smarter ones. The bulls are the people that just chase green and get scared at the color red. Bears are family oriented. How would you suggest preparing for the bear market? Well, this is such a difficult question because everybody's in such different places in their life. Focus on consistent acquisitions and basically almost ignore the price. Ninja says, yeah, I agree. I have to go searching for you on YouTube daily. Damn. Yeah, they must have not liked me. I must have done something. Probably one of my mushroom videos, my DMT videos, or my ayahuasca videos. They've just put me in like a dark corner for being against the grain. But hey, it's what you get for recognizing things that are valuable before everybody else. I'm 70 years old and I don't have 10 years ahead of me to invest. What do I do then? Well, you definitely do. See, one of my best friends is 73 years old. We take mushrooms together and MDMA. If I was 70, I would be more concerned about my time focused on sitting and contemplating the life that I'd lived up to that moment, more than monetary investments. You could take everything away at 70 from me and I could just sit down and do nothing, basically. It's a hard question. Awesome. Thank you guys. Remember to give us a thumbs up if you like this content. Please subscribe by going to any of the links down below. We try to do these shows frequently. I'm crazy, apparently. I swear a lot. I have no time for trying to pretend that you're going to become rich overnight by trading. I would be lying to you and I'm not going to do that. I'm going to tell you what works. I'm going to show you what's worked for people who have made hundreds of millions and billions of dollars. And we're just going to repeat that because there's no sense in trying to convince you to sign up for affiliate links or to pay for a newsletter that's going to just like, oh, if you trade here and you move there and you get 100% here and 100% there, like just go back and look at our venture capital plays. 100x on Matic almost. Why the fuck would you be jumping in and out of plays when all you needed to do was spend $50 a month on Matic for the last few years to make $1 million? Like, come on. Recognize the value of that. And lastly here, Chemo says, when you say taking the $1,000 and invest in yourself, it's the truth. I actually still take profits to continue to invest in myself, from trading classes to learning markets, building a business. I love that. Yeah, there are people that cuss and get crazy algorithms. Yeah, maybe, I don't know. Maybe it's because of my I don't know. Maybe it's because of my ayahuasca videos or something. Who knows? Thank you guys all for joining us together. I had a great time. This has been a lot of fun. You guys are all fantastic. If you haven't yet, and your mom's still alive, call her and tell her you love her. If your grandparents are still alive, which reminds me, I'm going to have to call them and tell them I love them as well. And remember that life is short and precious. Go outside. It is more valuable to you to be focused on appreciating what you already have than to be upset and jealous about what you don't. Happiness is worth more than money, and you can achieve that with no portfolio. Steve with the Arcane Bear. I'm signing off for the rest of the day. We'll see you guys on the next episode.